Friday, April 17th, 2020, MONERO 64, home of alternative economics and contrarian views. Today I want to talk about the day I realized our monetary system was not fit for purpose. It was kind of my Eureka moment. Before that, though, I'm going to quickly look at the markets first this morning. It's 8:23 a.m. Last night, after the close of the stock market in the US, we saw the futures jump 400, 500 points. There's a story about Gilead Pharmaceuticals finding a cure or a therapy for this disease. I see here, though, a story on Zero Hedge. This morning, Gilead pours cold water on report that sent market soaring. Anecdotal reports with no statistical power. So, in spite of that, we're up about 770 this morning in the Dow, up about 3%. So that's where we are. We are above that 24,000 level, 24,300. Is it manipulation? Maybe. Was the ESF, the plunge protection team, active after the close? Very possible. And why would they do that? Well, because it looks like President Trump backed down and he's given the states their power, really, that they should have in deciding what to do. So I think, it's a little bit of that. We'll have to see what happens before the day ends. I still believe that we're seeing a dead cat bounce. Yeah, we are above the level I thought was good resistance, 24,000, but not that far much above that level, I would say. Anyway, so we're up about 3%. S&P 500 is up 3% as well at 2879. The NASDAQ 100 is up 2% at 8943. Gold and silver, they have been hit hard, especially this morning here in London. Probably a little bit of both manipulation. The way they do it, the bullion banks, is they know the key levels and they just slam the market at those levels, and then it gets the speculators to trigger stops, and then the speculators start selling as well, and it's like a snowball effect. I'm very happy actually that the price of gold is lower. So we can buy more physical gold, hopefully cheaper. Hopefully the premiums are not going to go up higher. Because I still think there's a shortage out there. I don't think COMEX and the LBMA have much gold. I'll put a link to a really good article by Ronan Manley of Bullion Star below. I read it yesterday. Apparently COMEX has had to have the eligible amount of gold bullion that they have for delivery. So they're running short. They almost have no gold on COMEX and LBMA. Very little gold. So this is just a little temper tantrum by the bullion banks. Don't be discouraged. Currencies, very steady this morning. Sterling basically unchanged, so is the euro. So I won't go through them that much. Crude oil, the June crude is at 25.04, so it's still fairly weak. Bond market, the yields have gone up a little bit, but we're still at 0.64%, so not really a great sign. So now to the day, it was my Eureka moment, I guess. The day I realized that our monetary system, as I said earlier, was not fit for purpose. And I remember the day vividly, and it's weird because it wasn't a day like when someone famous was assassinated or 9/11 or something like that. It was just a normal routine day at the office for me. I used to work in the city, Bishopsgate. Some of you might know the city of London. And I used to go out for lunch to get a sandwich or anything else and come back to the desk. We almost always at the desk, being a broker in the city. So yeah, I went to get a lunch. I was walking back from Liverpool Street Station. And this was around 2003, I would say. Maybe earlier, but not much earlier, 2002, 2003. And I had already started buying gold coins. I had already started looking at gold, the history, the monetary system. And then I was putting some change back in my wallet. And for some reason, I moved one of these in my wallet to put maybe a £5 note. I like to put the lower denomination first in the wallet, and then the 10 and 20, and I took this out. And for some reason, I just looked at the £20 note. I stopped. I was walking, of course, I stopped, and I read what it said. I promised to pay the bearer on demand the sum of £20. So all the banknotes in England have that here. It says here. But no one hardly ever looks at it or thinks about it. But for some reason that day I did. And I thought, wow, they still have that promise there. And they don't pay anything. The gold standard was abandoned in, well, for domestic purposes in 1914 during World War I. Why do they still keep that promise? And what does that promise really mean? And it started me thinking, this system is screwed up. And basically what it means is that you could go to the bank prior to World War I, and they, of course, didn't have £20 notes. I think the biggest was 5. So you could take that to the cashier of a bank or the Bank of England. I think the Bank of England didn't deal with private people, individuals, but I'll come to that in a minute. So you could take that and say, I want my money. Because this is a promissory note, not really money. And this is another reason why you need to realize that the price of gold is not going to go down anytime soon, because they're creating more and more of these. So you could get 20. Basically, let's say we took a time machine, went back to 1913, and went to the Bank of England with one of these. They should give us 20 gold sovereigns, just under a quarter of an ounce, right? They don't anymore. So yeah, that got me thinking that day, and I realized, wow, this is not only an unstable system, where there's a lot of debt and leverage. The banks aren't capitalized well enough, but the whole system is based on a lie, because they've got this promise here, and it's an empty promise. And I even phoned the Bank of England and asked them about it, and they said, oh, what that means is that you can bring in an old note and get a new note. And I said, well, why don't you write that? You can exchange this for a new note. So they get away with it by saying that you can go there and get a new note for an old note. They're very clever in that way. But the other thing I would say, as it pertains to a cashless society, it's all being done in steps. So what are the steps? Well, there was a big emergency in 1914, World War I. They took this out of circulation. They wouldn't allow you anymore to convert your notes for money. So they took that out of the system. So people now forget that this is money. You know, over 100 years later, very few people know. The next step will be the cashless, I think, unfortunately. So they will take this out of the system, and you even forget that before World War I, you could actually get real money, because they've kept vestiges of that here with that promise. So when it goes cashless and it's all digital, there won't be that declaration there, that promise. It will be all digital. It would just be a number with a little pound sign on it. And yeah, this is the old £20 note. Now this is the new one. It's made out of plastic. You can see it's a little smaller. And they still have the promise, but it's even smaller. So people will probably not even notice it anymore. So to finish off though, I like to go over a story about the Rothschilds, actually, about Nathan Meyer Rothschild. He was one of the 5 sons who was sent to one of the capitals of Europe. He was sent to London. And he died in 1836. So I've got this book here, The Rothschilds, The Financial Rulers of Nations by John Reeves. This book was actually published in 1887, so it's an old book in terms of when it was written. Of course, it's it's relatively new. I bought it some years ago. And this goes to the point that I was making about you being able to take this to the bank and get it to redeem for real money. And it's on page 182. So it's talking about Nathan Meyer Rothschild, and I'll go through the story. Hopefully you'll enjoy it. This story is so characteristic of the man that its authenticity seems undeniable, but the same cannot be said of the following anecdote, which is evidently due to the fertile brain of some imaginative writer. So they're not too sure if this is true, but be as it may, let's keep going. It's a good story. It shows, nevertheless, the importance of the banknotes being redeemable or convertible into real money. The very minuteness of detail and the dramatic completeness of the narrative are enough to make one suspicious of its genuineness. The elements of improbability are too prominent and manifest to fail to strike the reader. The story runs that the bank mortally offended Nathan Meyer by refusing to discount a bill drawn upon him for a large amount by his brother Anselm of Frankfurt. The bank haughtily replied that they discounted only their own bills and not those of private persons. But the bank had to deal with one stronger even than the bank. Private persons? Exclaimed Rothschild when the fact was reported to him. Private persons, I will make these gentlemen feel what sort of private persons we are. 3 weeks afterwards, Nathan Meyer, who had employed the interval in collecting all of the banknotes he could procure in England and on the continent, presented himself at the bank as soon as it was opened. So there we go. He drew from his pocket a £5 note, and the clerk naturally counted out 5 sovereigns. There you go, 5 sovereigns. At the same time, looking with great astonishment at Rothschild. It seemed strange that he should trouble himself for such a trifle. He, however, examined the coins carefully one by one and put them in a little canvas bag. Then drawing out another note, a third, a fourth, a fifth, a hundredth, he kept demanding change for his notes. There you go. Never placing the money in his bag without first scrupulously examining the pieces. That's the sovereigns. In some cases, he would try them in the balance, as he observed the law gave him the right to do. The first pocketbook being emptied and the first bag filled, he passed them to his clerk and received a second supply of notes, thus continuing to drain the bank of its gold till the doors were closed. He had spent 7 hours in changing £21,000, so he got 21,000 sovereigns. But as he had 9 of his employees engaged in the same manner, it resulted that the bank had lost £210,000 from its reserve of gold. Moreover, Nathan Meyer had kept the tellers so occupied that no other persons could change a single note. Everything that bears the stamp of eccentricity always pleases the English public, and in this instance, the pique of the great millionaire caused endless amusement. The directors, however, laughed less When they saw him reappear next day at the opening of the bank, accompanied by his 9 allies, they laughed no longer when they heard the financial despot say with ironical simplicity, "These gentlemen refuse to take my bills. I have sworn not to keep theirs. I will merely warn them that I hold notes enough to keep them occupied for 2 months." For 2 months, 11 million of gold drawn from the bank. The bank grew alarmed. Something had to be done. The next morning, a notice appeared that in future Rothschilds' bills would be taken as readily as their own. So there you go. Yeah, this story or anecdote, as the author said, might not be true, but it just goes to show the importance of a bank keeping its promise, why it is important. So there you go. That was the day I realized our monetary system was not on a sound foundation. It was a house of cards. So the book is The Rothschilds, The Financial Rulers of Nation by John Reeves. I highly recommend it if you can get a hold of it. So if you enjoyed this video, please hit the like button, share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great day. Take care. Bye.